There is a major bank implosion happening, not in the US, but over in Europe. And it's one that probably failed many years ago, but there was one entity, one place that wasn't allowing it to fail. And finally, today, that entity said, nope, we're not supporting you anymore. So that company is Credit Suisse. It is a well-known company. It has been around 160 plus years, right? It is based in Switzerland. It is connected to a lot of other things. Now, its assets itself are about 600 billion. So the assets don't necessarily say or talk about the whole story, because Silicon Valley Bank had about 200 billion in assets, and you can't say that Credit Suisse is 3 times more important. You actually have to say it's probably 10 or 20 times more important. The problem with Credit Suisse is it's too large to save and it's too large to fail. So it's in this weird world, and now the European Central Bank has to figure out what to do with Credit Suisse. So that one entity that said it was kind of backstopping it was the Saudi National Bank. And today they basically said, no more, we're not giving you any more money. And so now it is imploding. It's just a matter of time until it goes under. And I'm talking maybe hours or days, not months or years. Now, you've heard me talk about Credit Suisse before, because I talked about how it's down 97%. Maybe a few weeks ago I said 96%. But basically it stopped working after 2007. So the global financial crisis broke this bank and broke Deutsche Bank too. I'll show you those 2 price charts in a second. But what we have now is a world of finances or financial institutions that got used to rates being at 0 or very low. And now that rates aren't there anymore, we're now starting to learn what banks shouldn't exist. So we know about Silicon Valley Bank, we know about Signature Bank, we know about Silvergate. Those 3 banks are gone in the US. They're gone. All in the last week, by the way. And now the problem has jumped over to Europe. Credit Suisse is in huge trouble. I talked about them last week or the week before, saying they had to increase the deposit rates, meaning what they're paying their depositors. They were paying them 6.5%, and they still didn't want to keep their money at the bank. So this is a big deal. Now, whether it's a Lehman or not, it's closer to a Lehman than not. And so let's go ahead and take a look at the price charts. I'll jump over to them so we can just get an idea of what this is looking like. So this is a price chart of Credit Suisse. And your brain doesn't need to know much about price charts other than, oh my gosh, that does not look good. So the bottom of the chart, which it's not even at yet, is 0. Right now the share price is about $2.16. So this is not looking good. Now let me just show a couple other companies. Here's Deutsche Bank, which, by the way, relative to Credit Suisse looks better. But if I zoom out, and I am going to zoom out now, I just want to show you Deutsche Bank and just point out to you what possibly else can go wrong. This is not a healthy looking price chart, which means it's not a healthy looking company. Let's just create some more clarity on this price chart. So that's Deutsche Bank, and then this is Credit Suisse over the same time frame. Right, both of them stopped going up in 2007. Now, just for reference, let's just show you UBS. So even though UBS wasn't publicly traded back then, you get an idea that it is much different looking. Let me show you JP Morgan, which is one of the largest banks in the United States. Here's the 2007 peak where Deutsche Bank and Credit Suisse stopped going up. So clearly something is really, really wrong with both of those companies. It's possible it's the tip of the iceberg, right? So we live in a very connected world. We live in a very connected world. What happens? This is all world. So this is the stock market for the total world, right? So when you look at this, you're looking at the total stock market index, or basically planet Earth. For things to know that they are stable, the price has to stay above that pre-COVID high, which is basically where the blue lines are. It has to stay above that. If it breaks below that, then things can get very unstable. Now, I'm just showing you the planet Earth stock market index, which is basically what VT is. So it's very likely that there's more pain coming for investors. And oddly, or maybe not so oddly, it's coming from the financial sector again. Now, part of the problems with Credit Suisse was probably because Chinese start pulling their money from it, Russians start pulling their money from it. Same thing with Silicon Valley Bank. Deposits were getting pulled from Credit Suisse. And when deposits get pulled, the lifeblood of a bank, well, that's it. They die because banks need deposits. That's what they live and breathe on. So it's very likely there'll be no soft landing, or less likely chance there'll be a soft landing. It's very unlikely the Fed is going to increase their rates. And the main thing that I'm really thinking about is, how do we know if things are getting more unstable? And the thing I want to point out is it's really that pre-COVID high. If things start breaking below the pre-COVID high, that is a problem. So let me just show you a couple charts here about that pre-COVID high to just kind of say, like, maybe if we look to where the problems may come from, it will give us a better idea if things are accelerating towards stability or instability. So this is a Bank of America. This is one of the 5 biggest banks in the United States. It's below its pre-COVID high and it's below its October low. So that is not good. Wells Fargo has a very similar problem. It's below its pre-COVID high. These 2 banks are looking very, very weak. So it has not been contained. It being whatever's going on in the financial sector has not been contained yet. And I'll look at one more price chart here before I really I'll look at 2 more. People are coming back to the dollar. That's not a good sign for overall stability in the stock market world, or the world of stock markets, because as the black line goes higher, that means the dollar goes higher in price, which means more people are going into it, which means more people are worried about what they own, and they're just going to go find safety in the US dollar. So that, if that breaks above its high from early March, then we're looking at more instability. And certainly if it breaks its high from September, October of last year, then all bets are off, and there's going to be much more downside coming into the market. And then lastly, I just want to show you oil. This might be one of the reasons why the Saudi bank, the National Bank of, the Saudi National Bank, said they are not backstopping Credit Suisse anymore. Oil's down 5% today. That talks more of a kind of a worldwide, I don't want to get hyperbolic here, but deflation or slowing economy. But we have a lot of different information coming into the market as we have one of the most important banks on the planet, Credit Suisse, and Deutsche Bank, in a lot of pain right now. So it started last week. It honestly didn't start last week, but when we started to see Silvergate and Signature and Silicon Valley Bank, those 3 failures happen, we're now starting to see it in other parts of the planet. So I want to put this together as a midweek video. I usually put a video out on Saturday, but things are really moving fast. I was actually planning on talking about something else, but given it's Wednesday, the markets are closed right now. They definitely, depending on what market you're looking at, are under pressure. Not all markets, but certainly the financials are under pressure. Oil's under pressure. So a non-trivial part of the markets, or non-trivial parts of the market, are under pressure today. Of course, this isn't a problem if you have a strategy or approach that is adaptive. It adapts to what is going on in the market. The problem is most people have approaches that are fixed, right? They keep you in a 60-40 or a 70-30 or an 80-20, and nothing changes with it. It's 60 stock, 40 bond, regardless of the weather, regardless of anything else. That is a system, that is an approach, that is a strategy that is not adapting. And I think of Darwin, Charles Darwin, who talked about what animals do best, right? It's not the strongest, it's not the fastest, it's the animals that learned how to adapt to what was going on around them. And that's 60-40, 70-30, and 80-20, which is almost every person who has a big box advisor over the age of 50, they have, is not adapting. And that's what's creating the anxiety and stress and the knot in the stomach for a lot of people. But it doesn't have to be that way. We at Fearless Wealth, we manage in a very adaptive, we adapt to the market. And so if you're curious about what that might look like, how that might look for your life and what you want in your 60s, 70s, and 80s, you can just go to the description and get on our calendar. Thanks everyone. Please like, subscribe, leave a comment because it makes a difference. YouTube likes those things and then more people see this video. I appreciate you watching this and I will see you on the next one. Okay, bye.